Now, before we begin, I would just like to run through a couple of ground rules for a productive virtual session. I know that we're all getting pretty used to this way of doing things now, but I just wanted to refresh our memories, shall we say. So firstly, please stay as engaged as possible. Secondly, as I say, we have quite a lot to cover in our hour, so can I ask that you keep contributions relevant to help us stay on time. You can freely ask questions in the chat function. I'll show you where that is in a minute. And finally, we welcome any additional members of your household who would like to learn, including pets and children. We know that everyone is working in very unusual circumstances at the moment, and these things are beyond our control. One of our speakers from our last session did incredibly well with a small child appearing behind him. So I'm just going to run through the agenda quickly. As I say, we have an hour. So we're just going to do a little bit of introduction and expectation setting. Then we're going to look through the A4S Essential Guide to Managing Future Uncertainty. And we'll run a quick activity based on that. And then we'll hear from Royal DSM around risk assessment, and from WBCSD with relation to ERM guidance, and then we will close. So the learning objectives for today. So after today's course, you'll be able to articulate the business case for responding to macro sustainability trends. You'll be able to understand approaches for integrating sustainability into risk management and decision-making frameworks. You'll be able to list practical methods and techniques for identifying risks and opportunities, and you'll be able to identify ways to further your own organization's approach to integrating sustainability within enterprise risk management. There is, of course, always the opportunity to ask questions, and we do encourage that. So to introduce you to the voices that you will hear today, just ask the next slide. I'm joined, so there is me. I'm joined today by my colleagues Helen and Elizabeth, who you will hear from later. And I would like to say special thanks to our speakers, Maaike from DSM and Gordon from WBCSD. So I'll now quickly do a very quick tech tour of Zoom. As I say, I know we've been using this technology for a little while now, but there are many different platforms, so I thought I would just remind you about Zoom. So the chat function should be on the right of your screen. Hopefully you can all see that and see that I'm typing hello in there. Please use that for any questions or any challenges. The A4S team will be monitoring that, and we will refer back to questions at an appropriate time. We'll also be using the whiteboard later. So there is the annotate function. So you should be able to see that at the top of the page under view options if you are using a laptop or a PC, or at the bottom if you are using an iPad. Finally, there will be a number of polls throughout the call. This is to keep the webinar interactive and is also necessary for CPD points. In the interest of time, please be speedy with your responses. Let us just test it quickly. So can you just let me know which discipline you're from? Finance, sustainability, risk management, or other? Oh, everyone's very speedy on this. Thank you very much. Perfect. Okay. Great, that's as long as I'm going to give you. So I'm pleased to see we have a lot of people from the finance team here, which is excellent. So welcome, and it's lovely to see you all. So please note that I am going to mute everyone now, and we will unmute you if you have a question. And after that, I'm very pleased to hand over to my colleague Elizabeth, who is going to take us through the first session.
Great, thank you, Lizzie. So in this session, I'm going to talk to you about the A4S Essential Guide to Managing Future Uncertainty. It's a practical guide to introduce finance and risk professionals to the potential business impacts arising from macro sustainability trends. So when we talk about managing future uncertainty, the first challenge for businesses is recognizing that there is uncertainty surrounding sustainability trends. What are the factors that contribute to this uncertainty? Well, they include long-term time horizons, the unknown scale and timings of impacts, lack of clarity regarding public policies and regulatory frameworks, and also shifting customer preferences. So for example, if we look at climate change, we know it happens over a long time span, but we don't know for sure when and how severe the impacts will be. And at the same time, regulations, societal views, and actions on climate change are also evolving. Another factor that contributes to uncertainty is that the benefits from addressing sustainability trends are harder to measure and quantify than the traditional risks. So in this A4S guide, we've set out the approaches that you can take to help overcome the challenge of uncertainty and to better understand the associated risks affecting your business. And once the risks are identified and assessed, you will then need to integrate them into your risk management and business decision-making processes. The view is over time, your organization will review and evolve these processes so that you're better placed to foresee changing circumstances, respond to risk, and also adapt to maximize the opportunities. Now, although the guide was published a few years ago now, the principles and practical guidance is still very relevant, especially under the current COVID-19 crisis. I think we will all agree that COVID-19 is impacting businesses across the world. And the key question we keep hearing is, how do we build back better? How do we use our response to COVID-19 to ensure an economic recovery that builds resilience, creates value for businesses, society, and the environment, and also builds upon lessons learned from this crisis? And resilience is about learning to thrive under uncertainty. This really resonates with the business case for responding to macro sustainability trends, as explained in our guide. And you can see the 6 key advantages on the screen now. Firstly, you will increase resilience by being prepared to respond and adapt to changing circumstances in the future. And secondly, you will identify new business opportunities, which can yield competitive and commercial advantage for your business, and to avoid pitfalls and threats. You'll reduce your exposure to regulatory, resource, and price risks. You'll be able to make better informed decisions and risk responses. And last but not least, you will build trust with key stakeholders and also create an attractive proposition for your employees. Now, overall, anticipating and preparing for these trends and the associated risks and opportunities should become an essential part of any organization's strategy. You will see in the next slide that there are 3 key steps to integrating sustainability risk into decision-making. First, you will need to identify the risks, then to understand and assess the impact, and finally, to integrate into decision-making. And in the middle, you can see we have monitor, review, and communicate, which is about having accountabilities in place for monitoring the identified risks. You will have periodic review to allow for new risks and emerging issues, and also procedures in place to report on how the risks are being managed. I will now go through each step just briefly. So the first step, which is about identifying risks, we have to first recognize the difference between traditional and sustainability risks, as you can see in this table on the screen now. For sustainability risk, you are looking at longer time horizon. They're usually harder to predict and harder to quantify, and you will need to involve multiple stakeholders. And the risks are often interconnected, so identifying them and understanding them will become harder. In this step, you can actually adopt existing methodologies that you're already using. For example, risk questionnaires, scenario analysis, PESTEL, and SWOT analysis, and other techniques that you might be using. I will now go through 2 common ones. PESTEL, which stands for political, economic, social, technological, environmental, and legal. So this framework is useful for identifying the external factors under each of these thematic areas, which may affect your business activities and performance. So for example, under economic, how does a move towards circular economy affect your business? Under technological, how does the use of AI or digitalization affect your organization? So this framework encourages strategic thinking beyond a short-term time horizon. And then another method that you might be familiar with is the SWOT analysis, but this one is specific for sustainability strengths, weaknesses, opportunities, and threats. So questions that you could ask under this framework may be, what are the environmental challenges that can create threats to your future business value? Where is there a gap maybe in the market where your company and others can create new solutions for environmental challenges? And what insights will be useful for your board or executive management to make decisions? This analysis will help to also identify connections between sustainability and other trends, and to drive action and collaboration to address the material business risks and opportunities. So after identifying the risks, the next step is about understanding and assessing their impact, which again is quite different when working with sustainability risks as compared to traditional risks. You can see on the screen, and you may already be familiar with the approaches you see here. So a traditional approach would be to do a quantitative risk assessment, maybe with two axes that measure the likelihood of occurrence and severity. You might adopt a simple approach to designate a low, medium, or high rating to the risk. But for sustainability risks, you would need to adopt a more complex methodology, which will allow you to have more objective accuracy on the impact. You may need to use more innovative approaches with multiple variables, including time horizon, to develop different scenarios for assessing your sustainability risks. Yeah, we have limited time now, but I encourage you to look at our guide later, which details out what are the benefits and challenges of the different approaches and how to apply them in practice. So after you have a better understanding of the impact, the next step is about integrating the risk into decision making, the third step. The guide talks about the enabling factors that will assist you in taking this step. And there are also other essential guides that you can refer to, which expand on how it's done in practice. For example, integrating sustainability into your strategic planning and budgeting, your management information, investment appraisals, and so on. So that was a quick overview of what you can expect to find in the Essential Guide to Managing Future Uncertainty. The guide includes a number of tools and practical examples that will help to bring to life the different stages that I just covered. We've also developed a maturity map to sit alongside the guide, so that will help you to assess where you are currently in response to uncertainty and how you can advance to a leadership position. So thank you for listening. I will now hand over to Helen for the next session.
Great, thank you, Elizabeth. If what we're going to do now is we're going to have a couple of poll questions just to check back on some of the things that Elizabeth has just spoken about, and then we're going to have a short whiteboard exercise. So if I could ask my colleagues just to put the first poll question up, there we go. And the first one is, what are the 3 sections of the MFU guide? And we've removed the screen that shows you the answer. So if you can vote on that one. And at the same time, if you just scroll down slightly, you will see what is the business case for responding to macro sustainability trends. Elizabeth talked about a number of factors, reasons why you might respond to sustainability factors in your risk management processes. If you can tick all of those that you remember hearing about, I'll give you a moment or two to do that. Okay, just one or two more coming in.
Yeah.
Excellent, thank you.
There. Okay, I think that's most people. There we go.
Most people, excellent. So we can see that everybody, well, almost everybody got the right answer of the first one. They are identify risks, understand and assess the impact, and integrate into decision making. And in terms of the benefits that Elizabeth referred to for responding to macro sustainability trends, actually all of those were mentioned. So everybody was right, at least in some capacity. So thank you very much for that. Okay, we're now going to do a short whiteboard exercise. So this is just really reflecting back on the different methods that Elizabeth touched on. What we are interested to hear from you guys is which of these methods you're currently using in your organisation, if any, within your risk management processes. So we mentioned briefly how to use the whiteboard earlier. So if you're not familiar with it, if you go to the top of your screen, if you're on a PC or a laptop, and you should be able to find the annotate function there, we suggest you put a tick on that screen, or feel free to write your name or your organisation if you prefer. Looks like a number of you have found that. And if you're on an iPad and a tablet, often it's down.
Yeah, everyone's a pro now.
Yeah. Everyone's got used to this over the last few months. Got some freestyling, which I always love to see. Give you a few more minutes. Okay, let's look at, there's a fairly good split across quite a few of them, maybe fewer over on Mind Maps and fewer on PESTEL. If I could maybe call on one or two of you to share a little on this. So I think I saw Steph from Unilever join the webinar. Steph, are you still here? Perhaps you could share with us what you've ticked and just a little bit around your experiences of using those tools, if indeed you use them personally.
Hi, yes, I am. I have not myself personally used them. What I have worked on is sort of following up with our ARA, which really covers everything that we use. I've actually put a tick across most of them, if only from conversations with our sustainability team, so Roger Seabrook or our CFO. They all seem to apply, but we always pick up also on whatever the common consumer trends are as well and bring those in. So there's a lot of work with our marketing teams as well to make sure that we cover that aspect.
Fantastic, thank you. And I think I saw Gerhard from Coca-Cola Hellenic join as well. Are you able to share any of your insights with us?
Hi, yes, good afternoon.
Sorry, I caught you off guard.
No, I just was sipping on the cup of tea you proposed before.
We're very British, don't you know?
Yeah, listen, we also apply overall similar, not identical, but also similar logic, of course, because of course for us also, identifying risks and quantifying them and then building also the scenarios how to respond is very important, and has of course also been a problem over the last couple of months with all this impact of COVID. Yeah.
Great. Thank you very much. And as you're right, COVID is obviously at the forefront of everybody's mind when it comes to uncertainty. There's a few people, somebody's having fun with stars, which is great to see. And there's a few people ticked other techniques. I wonder if anybody is willing and able to share what else they're using. Don't be shy, just unmute and feel free to speak to us. Anyone? Okay, not to worry, not to worry. Okay, so moving on from this exercise, thank you very much everybody for participating. What we want to do now is introduce the first of our guest speakers. So we're very fortunate today to have Maaike Lambrichts, who is from Royal DSM. Maaike is the Vice President of Risk Management and Internal Control. Many of you may have heard of Royal DSM, but for those of you who haven't, I believe the DSM stands for Dutch State Mines, but the organisation has moved on significantly since then and is now transformed into a global purpose-led science-based company, which is active in nutrition, health and sustainable living. And I think their purpose sums it up nicely when they say their purpose is to create brighter lives for all. So thank you, Maaike, for joining us today.
You're indeed correct. DSM stands for, back in the days, we're over 100 years old, the Dutch state mines, but we prefer to refer to it like doing something meaningful. So
absolutely. Fantastic. So I've got a few questions for Maaike. So if I could ask everybody, if you have any questions as we go, please do drop them in the chat function. Do also add any there that you might have for Elizabeth, and I will come for them at the end of this session. So Maaike, if you could start by just telling us a little bit about how DSM identifies sustainability risks and opportunities within your risk management processes.
Yeah, it's a real journey. It is not something you do like a one-off, like a one-off risk assessment, tick the box and on the way again. It's something we try to integrate into our regular decision making. And one of the most important elements, I think, is that we understand what is happening in the outside world, in the arena of sustainability. So what is the context? What are the developments that are going on around us? And for us, one of the most important teams or people in that is actually the sustainability team. And it started small, and now we have a handful of people, and they really scan for us, people from the business, people from risk management. They scan what is going on in the outside world. There is so much going on, and internally a lot of people still think, okay, sustainability, that's about greenhouse gas emissions. And they're not always aware that it's way broader, and it's changing, it's growing, it's changing by the day. So for me, it starts with having a seasoned sustainability team in place.
Okay, I mean, you mentioned climate change there specifically, and obviously about it being broader, but if you could start maybe with climate change, you could tell us a little bit about how you assess that risk and how that integrates into your risk management and governance processes.
Yeah, we started off back in, now if you really look back, I think we as a company had that journey started for us already over 10 years ago. Some of you might know we had a very visionary, sustainability minded CEO already in the 90s or early 2000s, and he identified that climate is a topic that was getting more and more important. So that it started actually with the divestment of a number of businesses with huge greenhouse gas emissions. Then the next step was, okay, how can we start working on improving our own emissions? And we identified that as a major item, so we put that on the map as a high priority. And we have started working on that first via small initiatives. And 2 years ago, we established the science-based targets, and we are we have set up a program to really deliver on those targets. So that is, for instance, the early start of climate risks. But we know all now that climate risks are way broader than only reducing your own footprint. And I think the TCFD is an important tool that we all can use to think climate risk through. I'm not sure if everybody on the call knows what TCFD is. It stands for the Task Force of Climate-Related Financial Disclosures. And they came with recommendations in 2017. It's still voluntary, but it explains what are the disclosures that companies should be willing to give to provide meaningful information on climate risks and opportunities to the external stakeholders. And I think and they have actually very good brochure or guidance with supplements and technical guidance. And they actually split it in two types of risks. They talk transition risks and physical climate risks. So the transition risks is what will impact us from the change to a low carbon or a net zero society. And the physical climate risk, that's about if we don't go to this net zero society, temperature will increase, and what will be the impact of the climate change that is driven by the emissions. And yeah, I think it's an interesting guidance to go over. It really makes you think about different elements. And we are in the midst of that journey, actually.
Yeah, and we will have a similar webinar coming up in, I think it's September, specifically on the TCFD. So that served as a really useful introduction. Thank you, Maaike. So what about the broader sustainability relevant factors that you referred to earlier? It isn't all just about climate. So how do you work to understand and assess what those risks and opportunities are in terms of what's going to be material to your business?
If I first think about opportunities, we talk a lot about risks.
We do.
But it's often much more stimulating for people from the business to talk opportunities. And you mentioned it with my introduction or the introduction of DSM. We now have a strategy called Purpose-Led Performance Driven. And one of the first steps of that strategy was that we looked at mega trends, things like digital, mobility, aging population, things like that. And we combined that with the SDGs, the Sustainable Development Goals. Then on top of that, we put our competences, what are our strengths as a company, and that is guiding us. We defined a number of focus domains, we call them, like nutrition and health. And that is guiding the opportunity part. So where do we want to grow? What are the end markets that are interesting? What are the value propositions that we should bring into the market? So that the SDGs is for us something that we use as a model to identify opportunities. On the risk side, I don't think we use the PESTEL ever, or not really for sustainability reasons. I think we use some of the external ratings and benchmarks, like CDP, like Sustainalytics, MSCI, EcoVadis. The way they rate and the questions they pose, that gives already an indication. Okay, what are the trends? What do people consider important? What is going to change? But also, I think discussions with customers or end consumers. What keeps them awake? What do they see from in the market? Even questions from investors and analysts. What are the topics they want to be informed about? That gives, of course, a hint where to look, where to focus. And yeah, for smaller companies, it might be, even as simple, between brackets, look at annual reports from your peers or competitors, because they also indicate what is important to us. And if you're in the same business, it could very well be relevant for yourself, I think.
Absolutely. So you mentioned the sustainability team there, you mentioned the risk team, who else gets involved? Where's the role of the finance team within all this?
I think to do a good risk assessment, and whether it's a formal workshop or guided discussion, or it's just a business decision where you integrate sustainability into it, I think you need two things. You need that understanding of what is happening in the outside world, and you need a deep understanding of your own business. And it can be purchasing, sourcing, it can be supply chain, it can be the marketing and sales function, finance, and a lot of discussions, finance is at the table. So yes, they should be involved and they should be developed to enter such dialogues. But in some cases, even the communications departments get involved, or investor relations, just to feed and to point out what do they get from the outside world.
Okay, that's really useful, especially as we have so many finance people on the webinar today. So can you give an example of how you're integrating sustainability into your decisions? I mean, you mentioned that just as you were talking then, so how do you actually go about doing that?
Yeah, on the greenhouse gas, I mentioned that we have set our targets, our science-based targets, and we're translating that into sub-targets. So we identify a number of drivers behind that overarching reduction target, and those we just integrate in our normal management practices. So we integrate them into the annual reporting, the quarterly reporting. They're linked to long-term incentives. So all executives in DSM, their financial incentives are depending on energy efficiency, on greenhouse gas reductions. So yeah, it's just one of the parameters that we use to steer the company. It's something that is not on the side. It's just one of the elements, like pricing or volume or EBITDA, or so that's more on company level. What we did within finance is we sharpened our instructions around capital expenditure projects. So if you come for approval, you need to make a business case, and then you need to integrate internal carbon pricing in that. So for extra emissions, you need to apply a €50 per ton penalty in your business case. And that's how what we did already as of 2016. Recently, we are also growing, we are maturing. So recently we even made it more strict, and we said every investment project that requires approval at a certain level, it needs to be submitted greenhouse gas neutral. So if you have an investment project that increases emissions, you have to think by yourself on solutions how to decrease. Mm-hmm. And the investments or whatever you need to do to get that decrease, that can be completely different project. Those investments you need to integrate in that original business case that you want to have approved, such that we in the end remain that it's a financially attractive business, even if we have to invest to offset the additional emissions. And those are two examples driven by finance specifically.
Absolutely, and I can see how having it as a factor in incentives and also in investment appraisals can absolutely focus the mind and make sure that it's incorporated into decisions. So that's great. I've probably just got one more question before we go to the floor. So please do drop any questions that you have for Maaike or indeed for Elizabeth in the chat function. I guess my last question is, what tips would you give to others who are starting on this journey, who haven't really thought about these broader sustainability risks and opportunities before, and they need somewhere to start?
Yeah, I think you need to organize one way or the other top management commitments. So they need to understand why this is important. and you need to train them or make sure they also have the knowledge. And not only top management. I think you need to educate leaders on all levels in the organization. What is the context? Why is it important? What are the drivers? What is material for us? So those are two important enablers. If you don't have them in place, it will be difficult, I think.
Indeed, indeed. So it looks like we don't actually have any questions from the floor. So maybe you've answered them all in your presentation. So I'll close with one final question then. So how has all this enabled DSM to be successful? And indeed, how you've defined successful?
I think two ways. By looking, and we are on a journey, and we're looking not only on our emissions, but we're also looking at our water risks and our waste, and by that way, I think we de-risk our company. We increase our resilience, and even maybe more importantly, I think it does focus our minds to look for opportunities. For instance, we have two businesses in the material space that really are looking for lightweight solutions, because that is helping the value chain. We are enabling others to reduce emissions. Or we have an important innovation, it's called Clean Cow. It's about enzymes that you can add to feed for cows, which significantly reduce methane emissions, which is a very nasty greenhouse gas. And that is, of course, a value. It's not about protecting value only, it's also about value creation. So having both angles, I think, positions us very well for the future.
That's fantastic. I think I was maybe a little bit quick off the mark saying we didn't have any questions, because we've had a couple come in. So Willem, you think you have a question? Feel free to unmute and ask it directly.
Yeah. Hi, Maaike. Yeah, thanks for this. The presentation that you give. What were the biggest challenges that you have encountered during, let's say, rolling out this? Well, you can call it even, I think, this strategy or this project throughout within DSM.
Yeah, maybe because we have a lot of finance people in the call. I think
that's my question.
Yeah, so I think one of the challenges is to convince finance that this is really important. For many years, I had the feeling that many, because I have a finance background, I've been 15 years in finance. Many of my colleagues were, that's the good news show of our CEO. But when it really, when we really talk business, it's about the euros again. And I think it's important to explain to the finance professionals that sustainability is not something on the side. It is about creating value and protecting value. It's about financial value. It's it's maybe less. It's more difficult to forecast due to its uncertainty and its long-term nature. That was also stressed by Elizabeth in the kickoff. But that understanding for finance is sometimes very difficult. They have to learn how to deal with uncertainty. And a lot of finance people are mathematical and want to do a calculation on NPV and IRR, and there's only one outcome possible, where there's a lot of uncertainty. So you have to assess what could be possible outcomes and what could be material to your business, and that one you need to focus on.
Thank you. And I think we've all had a bit of a steep learning curve in uncertainty recently. So thank you. One final question from Peter. Again, Peter, feel free to unmute and ask your question.
Sorry, it's loud in my background. Do you mind?
Oh, sure, no problem. Sorry, I just saw that in time. So Peter's asked, how was this received by your business unit partners in terms of asking for carbon input or carbon offsets?
I think because it's embedded in a total approach. Huh? So it's clear that we have commitment from top management. There's not any doubt about it. But it's also clear that reducing greenhouse gas emissions, a 30% absolute reduction, is one of our strategic deliverables. And so nobody, and I think that's an important element to agree on those strategic priority items. As those will also enable the people in the layers below, so to say, to take the right decisions, because they understand that is an important item for us. So no, and on the carbon and emissions, I've not noticed any pushback, luckily.
Great, thank you very much, Maaike. Really appreciate that. So I'm going to wrap up this session with a quick poll question. So if I can ask my colleagues just to pop that on the screen to check you're all listening carefully to Maaike. She talks about the TCFD, the Task Force on Climate-Related Financial Disclosures, and how do the TCFD classify the types of climate-related risks? There's options on the screen in front of you. See all those answers coming in now. Okay, I think we'll call it a day just about there. Did I click the wrong button? No. So it sounds like either you were all listening or you were already familiar with the TCFD, because the correct answer is transition risks and physical risks. So thank you. If I now just hand over to Elizabeth for our next session, and we will hear from our next guest speaker. Thank you.
Thank you, Helen. We're very happy to have Gordon Darling here with us today. Gordon is a director at the World Business Council for Sustainable Development. And today he will talk about the guidance that WBCSD developed in collaboration with COSO on applying enterprise risk management to environmental, social, and governance related risks. And he'll also share with us some best practice examples and some reflections on the COVID-19 situation. So may I ask participants to write any questions that you may have for Gordon in the chat function, and we'll go through them at the end. So welcome, Gordon. Thank you for joining us today. May I start by asking, who is the target audience for this guidance, and how does it help organizations respond to sustainability risks?
Hi, Elizabeth. The guidance itself has really been developed aimed at any organization that's facing ESG-related risks. The WBCS membership tends to be larger corporate, but the guidance hasn't been solely written with that particular audience in mind. It's really looking at that wider set of companies. We noted that there's an increasing prevalence of ESG-related risks across the global business landscape, and so what we were looking to do was to develop our guidance to supplement the COSO framework to really help and support decision making within companies, and therefore we're really looking to target decision makers within companies. And it was really interesting to hear Maaike's talking about DSM and the range of different participants within their practices within the firm, because our guidance really is targeted, as I say, at a range of different disciplines, not just risk and sustainability practitioners, but also thinking about procurement, investor relations, human capital, strategy and objective setting professionals, and communications and finance. all of whom are essential to kind of understand the sustainability and enterprise risk management alignment and focus if you're going to integrate sustainability effectively into the organization. So really, I think it's a range of participants within firms. And that also allows it not just to focus on risks, but opportunity as well, because you start engaging with strategy and business planning, etc., which clearly the opportunity side of this is directly linked to as well. In terms of how does the guidance help organisations respond, then we've looked at really processes that will allow us to leverage and extend the existing enterprise risk management capabilities within firms, and sustainability processes, principles and practices, and how we bring them together. So really have risk and sustainability working collaboratively. I think Rodney Irwin, who's my managing director, he talks about them being the very best of friends. And that's really part of the agenda here, is to get that integrated and common understanding around practice across enterprise risk management, sustainability and the wider business. And particularly the guidance helps align ERM in a sustainability context to the business model within companies. So the COSO guidance was refreshed in 2017 to basically reflect the business model, looking across governance, strategy and objective setting, performance, review and revision, and then information, communications and reporting. And we've developed our guidance in alignment with that to try and support that business model within companies. So yeah, that's in relation to the guidance of the organisations and how we'd expect them to support them with their response. I think one last thing I just want to say there, sorry to interrupt you, was rather than thinking of risk per se, what we're actually looking for companies to do is really look at resilience within companies, which is particularly prevalent, obviously, at this moment in time. Because as soon as you start talking about resilience, you talk a lot more broadly than just risk management. You talk about agility, vulnerability, response, and opportunity.
Great, thank you. And I think just now towards the end, you sort of mentioned the different sections of the guide, starting from governance all the way through to reporting. Perhaps you'd like to just take us through the different sections and maybe any best practice examples of companies that are applying the different frameworks to addressing sustainability risks that you can share with us.
Yeah, actually, when you're talking about best practice examples, Maaike gave a very, very good overview of DSM there. So that was very pleasingly, that aligns greatly with a lot of the perspectives that we've had, and a number of best practice examples came from Maaike there. So thank you for that. But the five kind of main pillars of, as I referred to a moment ago, of the guidance are looking at the governance and culture within organisations. So the tone from the top, the leadership, how the governance is delivered with teeth as well within organisations. So making sure there's not just a framework, but it's something that empowers decision making and ESG awareness. And we've seen a number of instances of companies. Stora Enso is one, for example, which has a board's subcommittee with particularly duties for the management of sustainability at board level, which is really heighten the awareness and understanding of ESG at that level, and the oversight and management of ESGs within organisations. And increasingly, one of the activities that we actually do with companies when we're doing workshops is ask them to draw out the governance structure within companies and make sure everyone understands it. And basic as that might sound, quite regularly we don't get a very clear picture of, or the understanding is not very clear and consistent across participants. So really looking at making sure the governance structure is well understood and the culture reflects the tone from the top, and awareness at the CEO level and leadership of that. Strategy and objective setting is the second chapter, and a number of things that have been mentioned already feature within that, really looking at practices around understanding the business context, horizon scanning, undertaking SWOT and PESTEL type analyses as well, helping companies really understand what value creation means in the context of business and what the value chain within their business might be. And this is really important because every company now increasingly needs to be able to tell a convincing story around how they are managing value and what their impacts and dependencies across a whole range of capitals beyond just financial, what these are. So, what are the impacts on natural capital? What's the impacts on social capital? So broadening that understanding of how you create value and your impact and dependency. That's a particular kind of focus around the strategy and objective setting chapter. The third chapter is around areas that you talked about, Elizabeth, earlier, particularly identifying, assessing and prioritising risks, and then responding to ESG-related risks, and really looking at steps to integrate ESG assessment across these activities. You will have already within organisations activities that will undertake these for more traditional risks, but what we're really looking at here is extending that capability to deal with some of the characteristics and complexities of ESG-related risks. So you mentioned the long-term onset of risks in an ESG context. These are also, they're complex, they span jurisdictions to beyond legal bounds of individual companies as well. So they have complexities of their own. But they also, and we've noticed this clearly in relation to COVID, the speed of onset of some of these risks can be extremely rapid as well. And that's not necessarily a factor that's taken into account as well as it might be when assessing risk. So one of the kind of phrases is moving beyond impact and likelihood. We can maybe talk about that a bit in a moment, but that's one of the focuses we have as well, looking at resilience, vulnerability, threats, responsiveness of organisations. And I'll talk about some other alternative methodologies shortly. The fourth is really review and revision of ERM activities. So how effectively are you monitoring your risks? And then how effectively are the processes and activities that you have in place, and are they still relevant? And one of the things that we'll notice coming out of COVID is that operational models, the business context will have changed significantly, and a number of the risk management activities and processes that organisations have in place may no longer be applicable, or the risk landscape that they're facing has altered significantly. We can all understand that. You can see the difference in supply chains that might unfold, for example, given the levels of global connectivity that we've previously been operating on. So that's really looking at activities and capabilities to respond and review your enterprise risk management effectiveness. And then the last chapter is looking at the quality of information flow within organizations, and then internal and external disclosures, and how reporting and communications of performance can really be enhanced, reflect the ESG journey and capabilities of the firm. And of course, increasingly this has an investor focus. It has a wider external stakeholder focus as well, but also employees want to understand what's happening within their companies and how they're upholding their end of the ESG deal, if you like. So we're really that's the final chapter: information, communication, reporting.
Great, thank you. And I think just now you did share some reflections on COVID, and given the audience we have today, from finance and risk, and I'm sure many of us are thinking about or may have already made a start to integrate sustainability risk into their enterprise risk management. Are there any top tips that you can offer them, or any advice given the current COVID situation that you can share with us?
Well, I think in terms of immediate responses, we're moving from probably through a series of phases as organisations, from an initial survive phase into maybe a revive, and then ultimately, hopefully, a thrive phase. And so as we're going through that journey, I think a focus on moving beyond just the traditional siloed risk management approach that many organizations have previously undertaken, and then really looking at a broader concept of resilience and agility within an organization is going to be one of the main things that we need to learn from this. And then so you have that conversation around resilience, and it's immediately more engaging with your internal audience. And I think getting that internal buy-in is going to be essential. We've also discussed and observed the high degree of connectivity and connectedness across our global operating models and supply chains, and the absolute dependency that businesses have globally and other actors within the system. And real work that we've been undertaking is really looking at how do you assess that connectivity, and how do you therefore understand where the most influential and influenced elements of your risk map might be. And I would recommend that whilst you can do some of this work in a really analytical manner, I think having the discussion around how connected you are and how connected the risks you face might be is a really important step to focus on going forward. We have done some analysis around networks of risk, and quite often you will see clusters that influence each other, and the aggregated impacts of clusters being significantly higher than the most impactful risks that you might anticipate from a normal, traditional impact and likelihood approach. And I referenced early really changes in the risk landscape as well. And so what we are going to have to look at is brand new risks to us. So risks relating to working from home, cybersecurity, return to work protocols, fundamental changes in operating model impact, making the profile of risks we're facing fundamentally changed. And I think the observation from this is that there are a number of instances around more agile governance, increased use of digitization, and the need for effective data management become prevalent and top areas of focus for organizations as we move into the next phases and beyond.
Great, thank you, Gordon. That was very useful and informative. Just conscious of the time, if you have any questions, please email them to us, to Lizzie, and then we will forward them on to Gordon and get back to you. Thank you again, Gordon. That was very helpful. I would like to just run a poll question now based on what you have heard from Gordon. How can your organization integrate sustainability into enterprise risk management? We'll just give half a minute for people to give their answers. Great. So yes, most of them, actually all of them are relevant, and I hope that most of you, will be going away to start thinking about how to integrate sustainability into the enterprise risk management processes in your organization. So thank you again, Gordon. I will now pass the time to Lizzie.
Great, thank you, and thank you, Elizabeth, and thank you, Gordon. So anyone who has come to or been involved with A4S knows that we like to see some actions following our event. So we just have a very quick poll, so you can just tell us how you can translate what you have learned on this workshop to your own work over the next 6 months. While that is going on, I will just say we will be sending you some further resources following this webinar. It will be a mix of some of the content that we've already discussed and some other useful links. We would like to get this information out as far as possible, so please feel free to pass on to any of your colleagues. The next workshop in our series will be strategic planning, budgeting and forecasting, which will be on the 16th of July at 4 p.m. British summertime. For those of you who are accounting or finance professionals, you might like to consider applying to the A4S Academy, details of which will be included in the follow-up email. So we finished our other poll? Perfect. So as I say, we're running several more webinars over the coming months, and in order to help us make this as useful as possible, I just have one final poll just to get your feedback, to see what you thought. I will leave this poll running. So all that is left for me is to thank our speakers again very much and to wish you all a good rest of the day. Thank you.